Welcome to the October 26, 2020 Advance Report for McGowan Group clients and NetWorthRadio.com listeners. I'm Spencer McGowan, your financial weatherman, with you each and every week. President, McGowan Group, and you can find us at NetWorthRadio.com for the extended program. Thank you for joining us for the fast-paced tour of the global financial markets. 2021 is just 10 weeks away. Are you ready? Let's look at some of the shifts taking place and the most important news from here in October. And by the way, it may not be the election. Let me give this to you right here. The Dow Jones Industrial Average spent most of the week around 28,000 to 28,600. It was a very benign week. There were predictions of pre-election volatility, and that still may happen, but the markets have become comfortable with a couple of things. One is either outcome. Now that the Biden transition team, if you will, includes Goldman Sachs, apparently from a headline we covered last week, and a moderation in policy. And then, of course, Trump's already been in office for 4 years. So this indicates, at least temporarily, the markets are comfortable with either outcome, and that may be the case over the next 8 or 9 days as we come up on the election. There's the pandemic low. This is year to date, 29,500. You can see the recovery. That was primarily driven by tech stocks, important events in tech stocks and healthcare this week. All right, this is the healthcare sector. It appears to be building strength. Our technician, Alex Tolene, the prophet, covering the fact that the healthcare sector has, yes, it recovered, but the medical dividend companies, the medical innovation companies, have a strategic advantage going forward that they've never had before. Operation Warp Speed, which we covered in last week's program, kicked in the door. As a matter of fact, for the team and their families, we bought COVID antibody tests that can be administered at home. That's already here. Notice the speed with which that was approved. It took years to get the pharmacy pregnancy test approved without a doctor, but yet you can get a COVID test for antibodies at the house. They're working on one for active antigens. The difference we explain in this week's program to the best of our ability without having another doctor on. We probably need to have him back. But the FDA added huge costs and time delays for medical innovation. It stymied some of the best innovations. And what COVID-19 changed is the necessity of emergency use, right to try. All of these things have also compressed the time that it takes for new innovation. Think oncology, cardiology. Those new innovations now have a much less bureaucratic approval process. That bodes well. Abbott reported earnings this week. They have the 15-minute COVID test. Revenue was up 10%, and their profits were up nearly 17%. So you could see this sector doing well. Not a recommendation for your portfolio until you actually come down and get a plan, but this sector, one of the keys, I believe, to 2021 success. This is the S&P 500 Profit Index. How much money does the S&P make every quarter? That's about $40 per quarter net after tax. Went down below 25 here in the second quarter. A rebound, but not quite yet 30. This appears to be too optimistic, but the forecast is reaching into record high profits sometime in late 2021. And that does correspond to testing and people figuring out how to operate with COVID and the innovations to actually solve COVID. And Operation Warp Speed actually plays a part in these forecasts. Here we look at a disappointing quarter compared to last year. All securities so far, you've reported a third of the S&P, or almost about a fourth. Minus 5% in sales growth, minus 15% for all securities. And if you took technology out of the equation, the S&P is actually down between 10 and 15% for the year. And that says that the tech led the rally and the recovery in the indexes, but that has changed. This week we had big money flows out of the NASDAQ 100, out of technology, and it started to flow into other spaces. Now, what happened in that flow? Netflix reports that they'll never again grow as fast as they did in the second quarter, essentially proving that with the third quarter earnings report and subscriber growth slowing at 78 to, well, we'll call it 70 to 80 times earnings. This was the sell-off going from 575 down to about 485 pretty quickly here, most of it this week. So what are you doing? You're moving away from COVID immune tech stocks into the areas that are going to benefit the most from recovery. All right, this is the pipeline index, energy infrastructure, the shutdown, the 2-week decline there. And what you've done here is built a base very strong this week. That index rallying on two pieces of news, the Dakota Access Pipeline getting approval from the 5th state to actually double capacity. At the same time, Kinder Morgan reported that their earnings have already risen back to within 5% of last year. The pipeline flow restored for natural gas, also showing in the natural gas price hitting $3 per million BTUs this week. And what does that say? For 2021, the energy sector may be the best bargain. Clearly it is based upon revenues. And what does it mean for portfolios? The most interesting categories being, in our opinion, global high yield bonds. Well, 9 of the best world managers in the world, and the benefit of 0% interest rates. Anything paying over 5% gets a premium. Pipelines have a double-digit yield at this point. And at the same time, the medical dividends showing strength right now. So those are 3 interesting categories. If you want no volatility, cash rates are 0. And I'm Spencer McGowan, President, McGowan Group. We'll be back next week with YouTube, McGowan Group. Be sure to subscribe. And if we have fast breaking news, especially coming up on the election, we'll do a special broadcast for you and you'll get that alert. Thank you for tuning in. Thank you for tuning in to our YouTube channel. I'm Spencer McGowan, President, McGowan Group, your financial weatherman. We sponsor each week networthradio.com broadcast. That has the charts and graphs, many of which you saw today. We also sponsor this YouTube channel. Be sure to subscribe for fast breaking news, an alert when we post something in a market condition that may have changed. Our goal is to help you as an investor make the right decisions at the right time. And that's part of what this YouTube channel is about, as well as networthradio.com. I am well served with a team of 10 people, including myself. And that team that cares is actually made up of people who devoted to your net profits and your success, as well as excellence in service. If you want an educational experience to follow this up, get to networthradio.com, themcgowangroup.com. Right here, we disclose our net client experience all the way back to 2001. What that includes, the bear market cycles of 02, 08, 2018, and the recoveries through the most recent quarter. That is true education of investors and exactly how our clients have done, disclosed right here. Further disclosures, value at risk of loss. Yes, investments are going to fluctuate. That's part of the reason for this broadcast. And that can actually work to your advantage. We'll build that into your plan. So I urge you to go to networthradio.com, fill out the preliminary client questionnaire, a free 1-hour brainstorming session by phone or at the Crescent in Dallas, and we will map out a multi-year plan for you and your family that's appropriate. Just because we talk about a security on this broadcast or any securities doesn't make it a recommendation for your portfolio until you have that written plan. Thank you for tuning in today, and we'll be back next week as your financial weatherman.